So that was pretty easy to spot phase C in this trade, basically just because of the high highs, high lows, the clear sign of this clear spring, which is the last test of the supply in an accumulation. And yeah, I just finished re-watching the Wyckoff trading courses, and I realized that my definition of phase C in previous videos was incorrect. I was actually naming the events that occur in phase C pretty much as phase D. But just to remind myself, phase C is the final test of supply in an accumulation trading range or reaccumulation trading range, or the final test of demand, I suppose, in a distribution or redistribution trading range. Now, one thing that I used to set as a rule was to see that phase B would be at least 3 times the size of phase A. That doesn't necessarily need to be the case. Phase B can be, just twice the size of phase A, and phase C can be an area that encompasses a much larger part of the trading range than I initially thought. Basically, phase C, but phase D is what I assume to be phase C prior, and phase D is essentially gives an indication of the major sign of strength and the move out of the trading range and the major, such as the major backing up action. So my trades are primarily going to focus around phase D, the move out of the trading range. I'm no longer looking to trade a breakout candle that is not a valid play. I can trade the breakout of the backing up action, or I can trade the final test of supply. Final test of demand in phase C. That is a how do I put it? A legitimate play for me. So here we have the preliminary supply, the selling climax, automatic reaction, secondary test, multiple commitments to the upside, and these secondary tests. So these are all part. So I'll just do a little breakdown here. Phase A, you can see the texture and the price structure is all the same. So these are all part of the same move, phase A. Phase B, you can also see that the price trades above the trading range, but the structure is generally the same throughout this area. So you can tell that that belongs to the same phase of the trading range. Phase C, we can see a definite change of character. It's super clear. Phase D, we can also see that. Obviously, I took the trade a little bit late, so it was actually valid for me to get in on this breakout candle because it was a breakout of the backing up action in phase D. I did not identify, though, this area as being a backing up action above the trading range until I applied some verbal price structural analysis, and noticed that that was actually the case. So if I remove all the markup, or most of it anyway, we should be able to see that I've taken this trade as a moving average cross over. So an accumulation, it's a moving average crossover. Put my TP in there. Just traded the breakout here after quickly noticing that was a breakout. So let me just let this run for a second. Okay, so just quickly do a breakdown here as well. You've got the this is a 5-minute. Okay, buy and climax, automatic reaction, secondary test. And again, we can see that this area of price structure is part of the same phase, phase A. Phase B, well, just looks like this wave action, pretty much. Phase C is a final test of the, of phase B, really. It just shows so much strength that it just breaks out, and we get in on the move back to the low volume area. So we get the major sign of strength, which is the huge breakout. I get in on the retest of the low volume area, put my stop underneath the low volume area, and my take profit at the top of this range, as indicated by the breakout itself. I think if I let this go too, it should ends up pulling back. So either way, good trade, two good trades for the book. And in both cases, entry after the major sign of strength. Beautiful. And both 1 to 3 risk reward. And that is all I look for in a trade to long trade.